Are you looking to improve your credit score? If so, you're not alone. A good credit score is essential for getting approved for loans, credit cards, and even apartments or jobs. But where do you start? In this video, we'll show you 5 easy tips on how to improve your credit score. Tip number 1. Pay your bills on time. Late payments can have a major impact on your credit score. Late payments can stay on your credit report for up to 7 years, and each one can lower your credit score. That's why it's essential to pay your bills on time every month. To ensure that you never miss a payment, set yourself up with reminders, whether through a calendar app, text message, or email. This way, you'll have a reminder to pay your bills before the due date. And if you know you're going to be late, contact the creditor before the due date to see if they can work out a payment plan. Many creditors are willing to work with customers who are struggling to make payments, so it's worth reaching out to them. And if you are having trouble paying your bills, consider reaching out to a credit counseling agency or financial advisor to help you develop a plan to get back on track. Tip number 2. Keep your credit card balances low. High credit card balances can hurt your credit score, so it's important to keep them as low as possible. One of the most important factors in determining your credit score is your credit utilization ratio, which is the amount of credit you're using compared to the amount of credit available to you. Ideally, you want to keep your credit utilization ratio below 30%. This means that if you have a credit limit of $1,000, you should try to keep your balance below $300. To achieve this, you can try to limit your credit card spending to the essentials and pay off your credit card balances in full each month. This will not only help you keep your credit utilization ratio low, but also help you avoid interest charges. If you can't pay off your credit card balances in full each month, try to at least pay more than the minimum payment. This will allow you to pay off your balance faster while also keeping your credit utilization ratio low. Another way to keep your credit utilization ratio low is by asking for a credit limit increase. If you have a good credit history and have been using your credit card responsibly, the creditor may be willing to increase your credit limit, which will lower your credit utilization ratio. Keeping your credit card balances low is an essential step in improving your credit score, and it's something you should strive to do every month. By following these tips, you'll be on your way to a better credit score in no time. Tip number 3. Check your credit report. One of the most important things you can do to improve your credit score is to check your credit report for errors. Your credit report is a detailed record of your credit history, and it's used by lenders and other financial institutions to determine your creditworthiness. If there are any errors or inaccuracies on your credit report, it could negatively impact your credit score. Thankfully, it's easy to check your credit report. Under federal law, you are entitled to receive one free credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, once a year. You can request your free credit report online through the official website of the Annual Credit Report Request Service or by phone, mail, or fax. Once you have your credit report, take the time to review it carefully. Look for any errors or inaccuracies, such as accounts that don't belong to you, incorrect credit limits, late payments that you know you've made on time, and so on. If you find any errors, dispute them with the credit bureau. Each credit bureau has a process in place to dispute errors, and they will investigate the claim and make corrections if necessary. It's also important to check your credit report regularly, ideally at least once a year, so you can catch any errors early and dispute them before they have a chance to negatively impact your credit score. Also, if there are any strange activities or signs of fraud on your report, you will be able to find them right away and take the right steps. Checking your credit report is an essential step in improving your credit score. By regularly reviewing your credit report, you can ensure that all the information on it is accurate and that there are no errors that could be hurting your credit score. Tip number 4. Don't close old credit accounts. Another important factor that can impact your credit score is the length of your credit history. Generally, the longer your credit history, the better your credit score. This is because a longer credit history demonstrates to lenders that you have a track record of managing credit responsibly over time. One of the ways to lengthen your credit history is by keeping old credit accounts open, even if you're not using them. When you close an account, It can shorten your credit history and lower your credit score. This is because your credit report typically includes the opening and closing dates of your credit accounts, and closing an account can make it seem like you have less experience managing credit. In addition, keeping old accounts open can also help to increase your overall credit limit, which can lower your credit utilization ratio, which is the amount of credit you are using compared to your available credit. A lower credit utilization ratio can boost your credit score. If you're not using an old credit account, it's still a good idea to keep it open. You don't need to use it, but you should keep the account active by making small purchases or payments on it every few months. This will help make sure that the account doesn't go dormant and show up on your credit report as closed. Keeping old credit accounts open is a simple but effective strategy. By maintaining a longer credit history, you can demonstrate to lenders that you have a track record of managing credit responsibly, which can boost your credit score. Tip number 5. Be patient. Improving your credit score takes time and consistent effort, so don't expect to see results overnight. Be patient and stay committed to making positive changes to your credit habits. Keep in mind that credit scores are based on a complex algorithm that takes into account multiple factors, such as payment history, credit utilization, credit history length, and types of credit used. So it's not just one thing you can do that will instantly improve your score. It's a combination of various actions that you take over time. Be aware of the fact that credit scores can fluctuate. Even if you're doing everything right, your score may still drop temporarily due to factors outside your control, such as a change in the economy or a natural disaster. But don't let temporary setbacks discourage you. By consistently following the tips outlined in this video, such as paying bills on time, keeping your credit card balances low, and checking your credit report, you'll be on your way to a better credit score. Remember, building a good credit score is a marathon, not a sprint. It may take a few months to a year to see significant improvements, but the effort will be worth it in the long run. A good credit score can open up many financial opportunities, such as getting approved for a mortgage or a car loan with lower interest rates. So stay patient, stay consistent, and keep working towards a better credit score. It's definitely worth the effort. Take into account that a good credit score is important for many things in life. It can play a major role in determining your ability to get approved for loans, credit cards, and even rental applications. A good credit score can also save you thousands of dollars in interest over the course of your life. So it's important to take the time to improve it. With the right approach, you can take control of your credit score and unlock the many benefits it has to offer. Thanks for watching. Please consider subscribing if you like this video.